As a professional accountant, I appreciate when a set of accounting records are properly maintained, particularly when the business is using online accounting software. It makes my job a lot easier. The problem is that accounting records aren't often properly maintained unless the person doing the books has a reasonable amount of experience as a bookkeeper. If you're a small business owner, your expertise is usually not in bookkeeping. If it were, no one would need to sell you on using accounting software. Underneath any implementation of accounting software, there is a fundamental accounting algorithm. It first appeared in Europe in the early Middle Ages. It is brilliantly and elegantly simple, and it works for any kind of business. It isn't rocket science. But you still have to know how to do it.
Almost 2 years ago, I ran across an accounting article on Fox News, and I just had to look. The article was entitled, 7 Reasons Your Small Business Should Use Accounting Software. Apparently, the first is that it makes bank reconciliations simple. That's nice, but what does reconciling the bank really mean? If my bank has a credit balance, is that a good thing? I'm pretty sure that credits are good. One of the best features of online accounting software is the ability to link bank and credit card accounts so that transactions can automatically be pulled into your accounting system. First, though, you'll need to know how to categorize the transactions using the double-entry bookkeeping theory. Automating the link to your bank can be very efficient. Often, though, it means inexperienced bookkeepers can incorrectly categorize a year's worth of data, and they can do it really fast. Then your accountant will have to sort out an incomprehensible mess. In cases like that, it's often better to start over from scratch. Xero Accounting Software is one of the best online accounting packages out there. It allows users to make adjusting journal entries. That's a very good thing. However, that feature comes with a warning. They recommend that only an experienced bookkeeper makes adjusting entries. They should take that a little further. Don't try to use accounting software at all, unless you have experience as a bookkeeper.
Most investors or lenders want to see statements with some kind of report from an independent public accountant. Accounting statements prepared by the owner or manager of a company are always viewed with some suspicion.
The biggest competitor to accounting software is actually spreadsheets. Pretty much everyone already has one, and has some idea how to use it. They are cheap, powerful, and you can download a year's worth of data into a spreadsheet in a few minutes. Often the self-employed, or other very small businesses start out using spreadsheets. They will still need an accountant to file their taxes, though. Before we leave the subject of managing payables and receivables, it is worth mentioning 2 alternatives to accounting software. PayPal allows you to pay contractors even in foreign countries quite easily. It will also let you set up a merchant account, send out invoices to customers, and get paid online as well. Another alternative is to use online invoicing software to maintain accounts receivable. It makes it easier for your customers to pay you, which is a really good thing. The best known of these online invoicing packages is probably FreshBooks. But there are many competitors. When evaluating software packages, we typically use G2.com. According to G2, you can choose the right software and services for your business based on more than 2 million authentic, timely reviews from real users.
Invoicing and making it easy for your customers to pay you is the reason most small businesses should start to use accounting software. But managing payables tends to happen much later, depending on the business. Most small businesses start out by using credit cards to manage their payables. The first bookkeeper is often an independent bookkeeping or accounting firm. Before you do it internally, you'll need someone with experience to do the bookkeeping or, at least, someone prepared to supervise. Often accounting firms are more focused on year-end work and income tax. As a compromise, some small businesses use invoicing software for managing receivables and credit cards for payables. It's hard to know what the author meant by a professional bookkeeping firm. By audit-proofing the books, the author was probably referring to an income tax audit. In Canada, certified professional bookkeepers should not be filing tax returns. They should be working with a tax accountant. In any event, no matter who files your tax return, the certification of the accountant is not nearly as important as their track record with the Canada Revenue Agency. Working with a tax firm that has a history of pushing the envelope will actually increase the risk of an audit.
According to the website of the certified professional bookkeepers, the knowledge expectation of their members doesn't extend to income tax. What's more, when it comes to preparing financial statements, they're expected to work in a supporting role and under the supervision of an accountant. That doesn't mean that you shouldn't outsource your company's bookkeeping to a professional bookkeeper. That may be the appropriate strategy for your business. Typically, though, the bookkeeper usually forms part of a team that includes an accountant.